Well, global markets are hanging on the ropes, cuts above both eyes, and today there was another right hook with the downgrade of Italy, as you've heard. European markets fell sharply. Milan stock market was down more than 3%, Wall Street fell 1%, the Japanese market in Asia today fell 1.6%. Commodity prices also fell. Oil, copper and wheat came off, and gold is continuing to correct from the heady levels of 2 weeks ago. At $1,900 an ounce, it didn't feel like such a safe haven after all. The Australian All Ordinaries lost another 1%, and there were pretty heavy falls among resources stocks because of those commodity price falls, with BHP in the lead. Kohler continued its impersonation of a yo-yo. All the banks fell more than 1%, but Metcash went up a bit after the federal court dismissed the ACCC's application for an injunction preventing it from taking over Franklin's. And the Australian dollar eased back to just above 102 US cents, although it did spend much of the day below that level. Overall, against the index, the currency was steady today. The Bureau of Agricultural and Resource Economics put out its quarterly rural production estimates today, and the volume of crop production is expected to be at a record high this year, thanks to the rains. Overall, the value of all agricultural, fisheries and forestry exports is forecast to be $38.6 billion in the current financial year, which is up 6.6%. And finally, just when you thought you'd had enough to worry about, here's something else. According to this chart, stock markets rise and fall with the ratio of middle-aged people to old people. It makes a bit of sense, I guess, since those in middle age are relatively high earners and consumers. But if you believe the population is ageing now, then it suggests that shares might have further to fall. And that's finance.